Hi everyone, welcome back to this week Weekly Market Update. So let's see what's happening over last week and also things to watch out for the coming weeks. I have shared a couple of things in my Telegram group if let's say you have joined in the public Telegram group previously. So you should be aware of some things that I'm watching on as well. So if you have not been joining, then please remember to help yourself by going over to the Telegram group because it's most likely I will post stuff during the weekdays in the Telegram group instead of uploading video in the YouTube or directly to the Facebook instead. So let's take a look what is happening for last week. So you can see that last Friday, right, the market closed higher. Mainly, one of the reasons is because investors try to shake off the latest bank fear. That is one of it. Second, maybe due to after the Fed raised a 25 basis point, right? Um, Subsequently, it may not be that aggressive throughout the years. All right, so it's kind of like dovish on what Fed have delivered over the last week itself. All right, so this gives a reason for most of the, all the three index actually went higher or closed higher on the day itself. Correct or not? But we can see that if let's say you are doing intraday trading, right? For example, by looking at the chart itself, we can see that the market actually went lower before it closed higher at the end of the day. The main reason, right, if let's say you have been read up the news before this video, you should aware that actually the sell-off is due to the Deutsche Bank that caused the downward pressure on the market sentiments. This is because they have speculates on Deutsche Bank will be the next bank like Credit Suisse facing the liquidity issues or facing any issues with the bank itself. Definitely is like a bank crisis was spitting over to Deutsche Bank and make the market weaker at the start of the day. As you can see that if let's say you are looking in the Europe side, the Germany, the DAX, all right, they are not performing well at the start when their market open on Friday itself. So the major crash, not really the crash, the major spike down actually bring the fear to the US market before the market open itself, right? So that is what happened on last Friday. Before the market closed, the bank, the whole index seems to perform at the green side, close at the green territory instead. All right, so this is what happening on last Friday of the news itself. So then this is what investors continue to assess on the Fed latest policy movement. So will there be any rate hike subsequently? It's actually based on the economy data, right? But Powell say that the credit conditions have tightened, which could put pressure on the economy. This is because of the bank, right? Bank run everything, so they are trying to tighten up. So at my point of view, right, I feel that we are always forward looking. I'm right to say we are always forward looking. So right now, with rate hike, may not be that aggressive. Because if let's say they continue to be aggressive, the bank will be definitely suffered the most, right? As we can see what's happening to SVB, right? But this SVB news, right? To be fair enough to say, right, is actually they didn't manage well enough. The top management teams didn't manage well enough. I think they do some over investments, sorting out of the liquidity issues. So the Fed interest rate hike is there, so banks should actually do some hedging by buying interest rate swap, to protect themselves instead of being open up. All right, so Fed hike the rate is not wrong to bring down the inflation rate. All right, yes, it will kill the jobs in between. A lot of politics. I'm not going to talk about that, but I think Powell is still focused on the inflation, which it will cause trouble to most of the citizens, right, in the US itself. So, but he will need to try to wait between the bank issues and the country issue itself. So, for my take, I think that coming to the April is usually the strongest market in the equity itself. So, I'm slightly biased on the bull side until further notice from the economic data. Uh, will be announcing 2 weeks later, right? So this is what my take. Of course, there will be a charting cover later on. Alright, so let's go to so this is the other deals. As you can see, Deutsche Bank is not the next Credit Suisse. You guys can read up. I think they are quite strong in their financial reportings, so it won't be that bad as Credit Suisse. All right, Deutsche Bank, they have came out. Next is actually nearly 100 billions in deposit pool from the bank, because everyone tend to get off, right? One by one, it's like a domino effect. Banks start to fall, right? So everyone will tend to pull out their funds, invested into the Bitcoin, go into the gold. So this kind of safe havens, right? Bitcoin is volatile, yes, but at the current moment, they may pour into over there. All right, so but to me, I think it's an opportunity which I mentioned previously. So which I mentioned previously, we guys can concentrate or start looking into bank ETF like KRE over here. We can do a DCA over here, dollar cost averaging. But of course, we'll be looking more in depth today. How do we set up the DCA? Just like how we set up on our stock counter, the C3, which I mentioned weeks ago, right? So we shall see for this week. All right, let's go to the chart today. So for the chart itself, right, by looking at a week, a top-down approach, by looking at a week, this is what I written previously. So we can see that out of the three index, right, actually, to me, I will rank the strongest in the Nasdaq. I think that a fund actually flow back to the technology side, because we can see, like I say, it's always price forward. If let's say the rate is not going to be that, it's not going to be that hawkish anymore, right? Rate may reduce, not reduce, or actually just pause there. Actually, it's a good thing for technology who is highly depends on the debt, correct? Not? So technology sector is always high debt, right? So rate not going to go up, which is good for them as well. So I think that there's a rotation of funds flowing to that technology or flowing to Hong Kong or China market, which I mentioned in my Telegram group, right? So for Dow itself, we can see right now, price. Let's look at the day chart. I mean, in the week chart, we can see the price is being resisted by the 50% Fibonacci at around 32,800, which I will just make it a round figure of 33. I always love a round figure instead. All right, so it didn't manage to penetrate through. So for next week, right, we shall see two things. Firstly, must penetrate through the 33,000 or above this, the start of the March candlestick. Then we will see more bullish sign. But if let's say we go into the day chart, okay, can we see anything else? All right, so we can see that the market is like hovering between these two Fibonacci, which is the 38.2%, 32,000 to 33,000. All right, so this is what I wrote previously, right? So you can see if let's say it break below 32,000, we may see it send lower. But yes, there is a false signal. It break below previously. It break below. The price actually go below to 31 something, and then it closed near to 32. And then the following day it go up. So I don't see this is an official breakdown yet. Alright, I'm just seeing that it's hovering and being minor supported at this price. Alright, so that's why right now we can see it's hovering between these two Fibonacci level, support and resistance. We shall see if you're able to break 33,000 or close above the weekly candle which I showed just now, and then we may be seeing on a more bullish side for Dow. But if let's say you want to rank more on the bullish out of the three indices, right, I will choose Nasdaq 100 instead. Alright, so for Nasdaq, right, we can see based on the weekly candles, alright, so it successfully touched the 38.2%, close near the 13,000, supported by 12,000, supported near 200-day moving average. So that's why I am more, if let's say I want to be more bullish right out of the economy for US, right, I will go into technology sector instead. So for next week, breaking above 30,000 is crucial. After that, if let's say break and close above, we may see it flow to 30,500. All right, the next Fibo level 50%, which is then I think is more at a higher chance. But if let's say it's being resisted next week, all right, at 30,000, it suddenly close and becomes price action showing some bearish candlestick, engulfing candlestick, then you may actually wanted to short it and putting 13,000 as your first stop loss level. All right, so this is how you determine whether it's a breakout play or whether it's a contrarian play is up to you. All right. So, but for me, I am more biased on the upside, so I will choose something like that. Okay, so this is what I'm looking at. Okay, so let's go into next is actually Hang Seng Index. Okay, so for Hang Seng Index, this is what I drew previously, right? Let's take a look. Where are we right now? So next resistance is around 32, 33. I believe we almost hit. It's December time, right? We almost hit. It came down. So previously, when I draw the chart, right, I say that we wait for a pull back before we entered in, right? I'll go and listen to my past video. I can't remember when. I did write it down, so sorry about that. But I did remember I draw these two arrow at this level, and I written is 20,000. I always like 20,000. Okay, so it's a good sign if it close above 20,000. Right now it break below 20,000, and then it's coming back to 20,000 once again. Okay, so if the market able to go up and close above 20,000, or perhaps even more bullish, close above 21k, I think there might be some, funds rotate into the Asian market. I think the Asian market or the people out there is not going to buy bill of the messy status of what's happening to the US at the moment. All right, so that is why I'm slightly bullish on the uh, Asian market instead. So let's look at China A50. So for China A50 is the same. All right, it's like almost dying. Am I right to say? So this is what I said, right? If let's say main ratio upside, if it close above 13,600, which is this level 23.6, all right, in the weekly candle. So we must close. That means this area. All right, this candle must go up and close above this level. Then we will be looking more at the upside itself. Okay, so if that's the case right now, it's hovering, but like I said, funds may start changing. So how can we interpret from this chart? Let's remove this candle. We know that this is a long-term support, term resistance, right? So I just have to simply draw a horizontal line over here. Okay, we can simply see it's a head. It's a shoulder, head, and shoulder. Am I right to say? Okay, so this is tend to act as a first support level around 12,600 level. Okay, 12,600. So by next week, if let's say the candle able to close a green here, then it may be more meaningfully to go, the bullish side, or people who want to take a risk, you can actually give it a try with a good tight stop loss right now. Okay, in order to break or go to the upside, we need to break the neckline first. All right, we need to break the neckline first. That means this clause is important. Okay, but of course, when it comes to this clause, your risk will be slightly bigger. Correct or not? So it's how you manage your risk and reward. Is what you want. So to me, I am looking more on the upside at this moment. So let me just draw here. Okay, so I will be writing later. Next, let's go to the next counter. We will be looking at Bitcoin. Alright, so for Bitcoin wise, we are still riding on it. Hopefully it hit 30k. Other than that, if you have long previously, remember to shift your stop loss nearer. There's no any other entry price that you can enter if you didn't enter previously. All right, when it dragged back for you to buy at 25,000, if you didn't catch it, then so be it lah. All right, you missed the boat. So people who catch it, remember to break even or to partial take profit in between. Okay, next counter which actually hit my TP is actually C Limited. All right, this is what I mentioned in 10 December. 10 December, where is it? Let's take a look. 10 December is somewhere here. Okay, 10 December is somewhere here. All right, at the point, the price around 60, 65. Okay, I say that the current price is 60. We eyed for $50, which is somewhere here. So the price actually go to 50. If you're long buyers of the upside, look at it. The date, look at it. You may say that I actually written before. Okay, go and see my video previously in 10 December. I think I mentioned that. All right. So it went all the way and it hit my TP level, $50. Okay, so sorry, TP at 85, right? $85. So it hit here. Okay, congratulations once again for people who have executed on this trade. If you have missed this boat, then wait for the next one then. All right, I can't. What can I say? What can I say? Right. So let me just remove all the marking. All right. So I might go into what happened if after he hit. What happened after he hit? What should I do next? That is for another lesson. All right. So basically, just what to say. If you catch it, congratulations for staying tuned on my channel. Okay, next counter which I'm talking just now. This is the bank ETF. Yes, there's a lot of messy stuff. This is what we talked about it last video. Am I right to say? As you can see in my Facebook page, I did mention. Okay, so but I didn't really draw out because I don't think it's time yet. But right now we can review it. So firstly, let's remove everything. Okay, let's remove everything. Okay, we can see there is a one big red candle, but we know what causes this, right? It's due to the SVB. True or not? So we just have to make some level yet. I mean, you can use your Fibonacci level if you want to. This is the monthly chart, gentlemen. 22019. Okay, so we can be looking at this level first, 40 bucks. Okay, when it come near here, it should be your first intake. Okay, it should be your first intake, like I say. If you miss it, then I really don't know what to say. All right, it can be your first intake. So if let's say it go even lower, then prepare. Of course, when it come to the first level, do not invest all your war chest into it. Okay, do not invest all your war chest into it. We know that the sentiments may not change. It still takes some time to play out. So it may actually go to 40, 37, 35 before have a better rotation, right? So if the price is able to hover around this area as long as possible, then higher chance it may recover. Okay, higher chance. Ultimately, the bank sector will not die. All right, we at this era still rely on the bank. All right, I mean, just being straight, being blunt, we still need the bank. Okay, so let's see. Yes, we may not know what's the next economic crisis. It can be go as low as 2008, like the GFC time. But like I said, if you want to buy previously compared to now, I think it's a better options that you entered now that you entered 1 month ago, right? Without the SVB news to cause that spike for you to go in. So for people who are more precautions, you can do your first barrier here, second barrier here, or third barrier here. It's up to you. Alright, so this is up to individual, but do take note, this is a huge price down again. Is there any things that going to cause this spike down? Right now, Fed is going to protect. They might not continue to raise the rate. It's going to like kind of like protecting the financial industry. Will there be any second or third or fourth bank beside SVB, beside I think first bank? Any crisis that collapse the banking confidence again? Uh, Highly impossible. All right. If let's say yes, it should be flagged out by now. Okay, so I don't think there will be another flash crash to this level yet. So most likely, what I will do is either I go in at this 23.6% Fibo around 39.40 level, or I will just go to the low of previously around 35. So this is the two area I'm looking at instead. I think it's more realistic than just crashing all the way to 27 plus. So this I will just remove here and here. Okay, so this is a monthly chart, gentlemen. Which let's go to the weekly chart. So this is the two area I'm looking at lah. All right, I will write this now nicely. Or perhaps I should do the writing now yet. Okay, so today is actually 25th March 2023. Okay, so DCA method. Okay, first where we are looking between 39 to 40. Okay, first bullet, that means first pack of cash, gentlemen. Second, we will be looking at 35. Okay, second bullet. All right, so this is what we are looking at. Okay, so if let's say you break below, then we shall see the next DCA we may make it lower, which is the 27. Okay, so last bullet, 27, final bullet. Okay, so when you do this CA, right, the ultimate thing is that you must confidence that this will eventually recover. True or not? It's not a one-way trip all the way down. All right, this I will do this CA on this ETF is because I believe the bank confidence, the bank system will definitely back once again, and that is why I bought all this. So if let's say it go below this level, right, I will just hold on to it, hold on for long terms. All right, this is a bank ETF. Is how you do it for people who want to keep holding until the all-time low, and then you load your final bullet. Is up to you, or you can divide it to 4 batch. But I think these 3 batch, all right, these 2 is very good enough. The third batch come in is very perfect scenario to play out for this ETF itself. Okay, so that's all for my this week really update. Hopefully you guys learn something and learn on how to do DCA as well, by dividing your cash portions and your entry level where to go in. Alright, but ultimately you need to choose the right counter to do DCA and have confidence in the counter itself. And do take note, this DCA method is that you need to invest cash out of your so-called comfort zone share money instead. Meaning to say that you are not in the rush of using this amount of investment, right? You cannot be like, oh, I invest this next week and I wanted to draw out the cash next month. We are looking perhaps to end of the year for the system to recover, for the stocks to rebound, anything possible. All right, but do not use all the cash. This should be come out from your spare side. Okay, that's all for this week Winning Market Update. Hopefully you guys enjoy. Remember to share and like and share to anyone want to learn on this kind of ETF DCA averaging. Show them this method. Hopefully they learn some or one another. That's all. Bye bye. Enjoy your weekend.